That's the show, and you're checking in with the investor genius.
What's going on,
Prince Dykes.
ladies and gentlemen, boys and girls, and children of all ages? You are now tuned into the Investor Show. It's a late night show. Don't forget to hit that like, subscribe, comment, and share button. And it's always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time. So we are going to jump straight into it. So with that being said, ladies and gentlemen, we're going to be talking about what came out here today. The U.S. added over 900,000 jobs in March, and the unemployment fell to 6%. So today we're going to go over the jobs report. We're going to look at that jobs report, see what it's looking like. And also, most importantly, we're going to see how does this make so much sense to investors. So how does this make so much sense to investors? Because investors, by looking at the jobs report, by looking at unemployment, you're going to be able to see what sectors you can invest in, how the economy is doing, how the economy is going to rebound. So if you're catching this live, don't forget to go to hit that like, subscribe, comment, and share button, and tell me where you're from if you're able to catch this live. So, ladies and gentlemen, the first thing we're going to talk about is, got the hiccups a little bit. Investor Show mug always knocks out my hiccups. Get yours today. So the first thing I want to talk about, ladies and gentlemen, leading economical indicators. What are leading economic indicators? If you're here live, tell me what you think leading economic indicators are, as I'm going to share my screen and show them to you anyway. So right here, I'm going to go over to the conferenceboard.com.org. They put out a lot of great stuff. I put them on the show a couple of times, talk about some of the great reports. But right here, the conference board put out a leading economic indicator for the United States every year. So right here, leading economic indicators are indicators that's telling you what's probably going to happen to the economy next. So they use 10 components: the average weekly hours in manufacturing, average weekly initial jobs claims for unemployment insurance, manufacturing new orders, consumer goods and materials. Also, they look at the index for new orders. They look at the manufacturer's new orders, non-defense capital, building permits. They look at stock prices, leading credit indicator, interest rate spread of the 10-year treasury bond less the federal fund, and they look at the average consumer expectations for business. Those are leading economic indicators. When you listen to those leading economic indicators, you can see right here there's a lot of manufacturing, there's a lot of jobs report, employment, unemployment, stuff like that. This is going back to the most important topic that while I'm doing this show today, and this is to talk about what came out today, the employment situation report. The employment situation report. Y'all give me 1 second here. I don't like that background they threw up there on me. All right. Yeah. So the economical situation report came out today, and the economical situation report is very important because this is going to tell you, hey, how is employment going? How's employment looking? Also, those manufacturing hours, all those great things, those leading economical indicators. Let me see what y'all saying in the comments before we jump straight into everything. Oh, look at you. Okay, Max B. What's going on, Max B? Give a round of applause for Max B being in the building. He said the PMI numbers or unemployment numbers. There you go. Al, what's going on? Al is in the building. What's going on, Al? Lucky's mom, how you doing? Thanks for checking in. All right. So the employment situation report came out today. So let's take a look at it together. We're going to be able to see manufacturing numbers. We're going to be able to see construction numbers. We're going to see who made the most jobs this quarter. And this is a leading. So I watched these to look for leading economic indicators going into the future. And this is put out. We're going to look at the raw data. And if you want to find the employment summary, the employment situation summary, this is on BLS.gov. This is the Bureau of Labor Statistics. They are the ones that put out employment numbers. That's what we're going to review today. So we're going to read it together. All right, let me pull it up. Let me share my screen here. Look at me. I'm all prepared today. Where we at? Employment situation summary. This is coming from BLS, Bureau of Labor Statistics, right? This came out today. So this came out April 2nd, Friday. So right here, they rose by 916 jobs in March. Cool. Unemployment rate dropped down to 6%. Cool, right? So let's see, where did these jobs come from? So the unemployment The unemployment rate edged down to 6% in March. The rate is down considerably from its recent high in April of 2020, but it is 2.5% points higher than it was during the pandemic levels of February. So right now they're saying, hey, 6% is good, but this time in April it was a little bit lower, which is it's good. It's going in the right direction. The number of unemployment personnel is at 9.7 million, continued to trend down in March, but is at 4 million higher than in February of 2020. So they're saying the unemployment numbers are dropping, but they're not dropping enough because we had less unemployed people in February of last year. That's cool. Here we go. Here's the bread and the butter. Here you go. Y'all ready for the gym? All right. Now let's get down to the numbers. You know what? Let's go right here. This is what they said right here. They kind of led some of it right here. Let's go right here. Job growth was widespread in March, led by gains in leisure and hospitality, public and private education, and construction. So they kind of said these are the hot spots. The hot spots where people, the places that really rose the most in employment were the ones who got hit the worst. That's kind of funny. It's like a rubber band. The ones that got pulled back the most are the ones that are shooting up the most right now, which is leisure and hospitality, something like a Six Flags or a Disney. That was a lot of leisure places people would go to hang out. Hospitality, things like hotels, travel, those things got hit. Public and private education, that's pretty self-explanatory. And construction is pretty self-explanatory too. So let's get down to these numbers. Where are we at? I need to get that little Jeopardy sound. Doo-doo. All right. In March, here we go. In March, employment in leisure and hospitality increased by 280,000 as pandemic-related restrictions eased in many parts of the country. Nearly two-thirds of increase was in food services and drinking places. So food services and drinking places had the biggest growth of everybody. Now, here's another one. Construction. Construction added 110 jobs in March, following job losses in the previous month of a negative 56,000 that were likely weather related. So they're saying people, of course, we had these ice storms and blizzards going on. So 56,000 people probably lost their jobs. Employment growth in this industry was widespread in March, with a gain of 65% in specialty trade contractors, 27,000 in heavy and civil engineering construction, and 18,000 in construction of buildings. Employment in construction is at 82,000, below its February 2020 level. So when I can see construction growing, what was a leading economic indicator? Building permits, construction. So I'm glad to see construction is a leading economic indicator. Employment, the employment numbers drop themselves. Employment is a leading economical indicator. That's 2. Now they got employment in professional and business services rose about 66,000. That's not a employment in professional and business services, not something I'm overly concerned with. But here's a number that I am concerned with. Y'all ready for it? Here we go. Manufacturing employment rose by 53,000 in March, with jobs occurring in both durable goods and non-durable goods. Employment in manufacturing is down 555% since February 2020. So when you're seeing employment add on people and you're seeing durable goods are things like washers and dryers and things like that you're going to keep for a while. And non-durable goods are things that you're going to hold for a short period of time. You always got to think about it. Durable good orders and non-durable good orders are always tracked. So when I see numbers rising in manufacturing, rising in construction, and employment starting to decrease, that is a bullish indicator on the market. Everybody know you tune into me. I'm probably going to be a bull guy. I'm just a positive person in general. So that's one of the things that you're looking at right there with employment into the manufacturing sector growing. Then you have construction growing, even though they're still a little bit down, but they're headed in the right direction. Unemployment is coming down. Then they have transportation and warehouse added 48,000. Transportation added 48,000. Employment in warehouse trades was 24,000. Warehouse trade, that's a big one, with job gains in both in durable and non-durable goods. Employment and wholesale trade is 234 lower than February. So they're still down, but they're in the right direction. So wholesale trade is up. I like manufacturing being up. And I looked at wholesale, manufacturing, and who else was the other one? Construction are my three big ones. So right here, to answer everybody's question, the sector that had the most growth, let me pull it up here. Where was it? Did I miss that number? I already said it earlier, but I want to show it to y'all again. I passed it. The area with the most growth, let me get where's my drum roll? Where's my drum roll at? I should already have my drum roll queued up, but it's okay. I'm getting quicker with it. All right. So the section with the most was restaurants, drinking areas. Right here in March, employment in leisure and hospitality increased by 280,000 as pandemic restrictions started to relieve. So food, services, and drinking places. So pretty much restaurants. So does this mean I'm going to go out and buy a whole bunch of restaurant stocks? Probably not. But this is a bullish indicator on the market. This gives me the impression that inflation will increase because we just put a bunch of stimulus package money out there. Then you have a bunch of people getting back to work, obviously, and getting their jobs back and hiring. And I think this is a bullish indicator. When I look at construction is growing, manufacturing is coming back, and I look at wholesale trade is going up. Those are all building. When we are building and things like that, why are we building? Somebody must be buying a house. Somebody must be buying a building, something like that. So all those things, when I look at construction numbers that look that good, that gives me an indicator that we are in a pretty good situation. All right. Let me see what y'all saying in the comments. What else I wanted to get into before I got out of here? I think I had wrote another key. Okay. So we talked about what does this mean to investors? So we're going to break that down. Let me see what you guys and girls are saying in the comments before we break this down to what this means to investors. I kind of gave a little bit of it away. Real Deal Financial, salute to you. Salute to you, Real Deal. Salute to you, my guy. Kid Kelby on YouTube said, good evening, Prince. Good evening to you as well. Pete for life. He's out there in Phoenix, Arizona. He said, I'm here, everyone. Phoenix in the building. All right, good. Glad to see all of y'all. Real Deal and Pete for life is in here. And Let's Sip and Talk said, late night, I see Prince Freeman Kennedy in the building from South Carolina. All right. Yeah, definitely a late night for me. Had to get some other things done, but of course, this is the Investor Show. It's always sporadic, right? You never know when the Investor Show could be live. But round of applause for everybody that's in the show tonight. All right, round of applause for everybody out there to get that. Now let's get into what does this mean to investors? Okay, Prince, you just told us about these unemployment numbers and all of the good stuff like that. This boils down what this means to me. Of course, I'm a bullish, positive person, and I'm always looking for a way to be bullish and positive. And when I look at this, this is an indicator that when we have construction work, we just went over leading economic indicators. Leading economic indicators are indicators of where the economy is heading, right? So we already said they look at building permits. Before you build, you must buy a building permit. Once you do not buy a bill, you must apply for a building permit. Once that building permit is approved, then you must hire workers. So if you're hiring workers in construction, that's a good economic indicator. Manufacturing. When I see manufacturing jobs coming back and starting to push, that's a good thing. The sector that led the way was restaurants, drinking areas. That was the one that led the way. Cool, not too surprising there. Not anything of note of there. So when I look at all these things, I'm basing this off of financial data. I'm looking at unemployment is going down. I'm looking at people are getting back to work, construction. I'm looking at manufacturing is starting to shape up and wholesale trade is starting to shape up. That's a leading economic indicator to me. Now, the downside to this, I think this will increase inflation. If inflation increases, you're going to see the 10-year bond start to go out of control like it's been doing earlier this year. And I think it's going to knock down tech stocks. I think the NASDAQ may struggle for the rest of the year. It was a struggle quarter for the NASDAQ. The NASDAQ so far this quarter was the last loser of the three major indexes. That's for the NASDAQ, right? But for the Dow Jones was a winner, right? The Dow Jones was the winner for the first quarter that we ended up in so far this year. So now when I look at this, I think that inflation will increase with so much money being pumped into the economy and people getting back to work. I think we're going to see a rise in goods and services. Very good for real estate. Very good for real estate, and I think it's going to be very good for Dow Jones companies, and I think it's going to be very good for the S&P 500. This is shaping me up to be bullish on the market for the remainder of the year until I see otherwise. So this is a bullish indicator. That's what I think it means to investors. Watch out for inflation to rise. If inflation starts to rise, that means that interest rates could start to rise. I don't think he's going to rise. Jerome Powell is going to rise interest rates anytime soon, but that's a great indicator. I would like to interview Jerome Powell too. Maybe one day when he's no longer the Fed chair. But I don't think he's going to raise the interest rates anytime this year because we still have relatively high unemployment, 6%. That's cool. But I think last year before the pandemic was at about 3%. So inflation is coming up, but I can see also unemployment is not in a place to be raising interest rates at this time. So what does it mean for investors? Inflation, I believe inflation will start to increase when people are getting back to work, and as unemployment starts to drop, you're going to see more people spend more money like we always do, right? So anyway, I think this is good for the S&P 500, Dow Jones. Keep investing, keep putting money into your major indexes. Your construction stocks, I wouldn't go too far with those, but the stocks that are going to bounce back, you got your travel that's still doing good. And I think that green energy is going to be around, but I think green energy may get caught up right now in the short term with the current economy. So one of the simple ways, if you're someone, you can get leveraged bullish ETFs if you are an experienced trader, know what you're doing, or you can get calls on the S&P 500 and Dow Jones. So in my particular way of looking at it, I wait till something crazy happens. Something crazy will happen sometime next week. I wait for the market to slide, but even though we see these downturns, it's still a bullish economy. So I wait for the market to pull back, and when it pulls back, that's when I jump in to catch that little jump, a little spurt or whatever. All right. So let me see what y'all say in the comments before I get out of here. Hopefully y'all enjoyed this episode. Hopefully y'all got something out of it. All right. Wait, hold on. Kobe. Real Deal said, I'm long rare earth materials. Rare earth materials. And I need to get a little sound effect that says, ooh, that's a pretty good one. I haven't thought about rare earth materials. What do you mean? Things like wheat, like commodities, or something rarer than that? Kyle Casey in the building. What's going on, Kyle Casey? Kyle, I got to get you on the show. I've been saying this forever. He said, my guy, just showing love. Appreciate you always. What's going on, Kyle? Thank you for being there. Oh yeah, Jones Light said that IG video with your son is still funny. Yeah, it is. That was right when the pandemic hit, when the kids were staying at home. And at my old house, I was at my old, I brought this house, but the house I was living at that time, he just walked in kind of like shooting like this live, talking to everybody. And he just walked, I'm just looking at the monitor and everything. I see some little kid walking in the buildings. I'm like, what? Don't tell me. There's my son in a onesie. That's my son, Wesley, everybody. Yeah, it definitely was funny. Definitely was funny, Jones. Like, lithium ion battery, clean energy plus $400 billion tax credit. Okay, that makes sense. Lithium ion battery, because as energy becomes more. Okay, I get what you're saying. That's pretty good. Tax credits. Okay, that makes sense. Okay, Real Deal is in here heavy. He says, tech stocks are shaky, but semiconductor shortage must mean a rise in stock prices as Taiwan semiconductors. That's true. I'm definitely keep an eye on them. Yes, Walmart and Target are going to be hotter right now than I believe in the tech so far this year. Freddie B, what's going on, Freddie B? Give a round of applause for Freddie B coming in. He said, Freddie B, I am here. My knee is doing great. Freddie B, man, I'm glad your knee is doing great. He said he's here. His knee is doing great. Big fan of the show. Long time follower of the show. So definitely glad to see you in here. Glad to see your knee doing great. Hopefully you got a chance to read that book as well that I sent you. And hopefully it was definitely useful for you as well. Let's see, my man Michael coming out of Canada. Michael, what's going on out there, my lemonade brother? What's going on? Michael out there in Canada. All right. So Real Deal says in infrastructure bill, they are prioritizing 35 rare earth minerals priority needed in EV and trucks. I gotta look some more. I gotta look deeper into that. That's good. That's good. I like that. So essentially what he's saying is, the electronic vehicles, they have something they have to rely on as well, which are batteries, ions, things like that. So they're saying, hey, we have to rely on that as well. So that's going to grow because as these batteries grow, they're going to be a rare material that we have to do things for. So, but yeah, that's definitely a good one. But wanting to keep it on top of here for just looking at these jobless claims and things like that. That's very important to look at. I'm very bullish right now on the rest of the year. Even though the NASDAQ struggled this year, it's still up 2%. Dow Jones is about 8%. S&P 500 is about 7% so far. So I think that things more of the Dow Jones, like the Walmart and Targets, are faring up. But Apple and they're starting to wake up a little bit so far this year as well. So we're going to look at it. All right. So hold on. I want to ask you this question, Real Deal. You said you're buying copper and uranium and all of this stuff like this. Where are you getting this from? Are you using an ETF? Are you using a different platform? What are you using? I need to open up my line too, so y'all can call in. Which platform? How are you buying these rare earth materials? These rare earth materials that are going to be used for How are you going to do this? How are you doing this? I'm very interested in that. Using an ETF, a mutual fund, or are you actually buying them and having them shipped to your house? Or how are you doing this? I definitely want to hear that. I wish I had my line open too. You could just have my number going across the bottom when people can call in. I can talk to everybody live. Maybe next show. I always say that. Oh, maybe next show I had my lines open. Then forget about it. I don't think about it until I get live and want to talk to y'all. Because sometimes when I say something, we don't respond, it get a little lengthy. So okay, because I know you can get rare earth materials. Okay, so you're getting it from ETFs and ETFs, companies, and specs. Okay, got it. Okay, all right, definitely keep that in the wind. We'll see how that's moving. All right, because always remember, ladies and gentlemen, the bull will always win, and you never want to be behind the bull. You always want to be in front of the bull. So when you see that bull is coming, yeah, I know that don't make sense in real life. I remember when I was in Spain, I never did want to be in front of the bull. I wanted to be behind him. But in investing, you want to be in front of the bull. In real life, you want to be behind the bull. All right, ladies and gentlemen, thank y'all for tuning in on this late night episode. Hopefully y'all got something out of it. And to the next video, podcast, cartoon, or whatever else crazy you see me doing around the globe. My name is Prince Dykes. Peace, be safe. I'm out. Thank you.